Good afternoon. My name is Martin Straka. I've been in the mortgage business since 1990. A lot of the questions that you may have when it comes to mortgage financing are the same questions that my customers ask me all of the time. So we've decided to tape a few videos to try to answer some of your questions and give you the information that will be important to you. I'm sitting here with a friend of mine, and we're just today going to be discussing, what are we discussing?
Well, annual percentage rate is a question I get a lot. People look at a loan and they want to know what exactly that is.
Well, it's the annual percentage rate, also referred to as the APR, is another one of those great government concepts. It sounded good in theory when they put it together, but in execution it's not always as effective. The concept behind the annual percentage rate is that if you were to take the loan that you originally applied for, if you were to subtract out all of the costs that are associated with you getting that loan, then that would help you determine the proper interest rate for you to shop around as a consumer. And the idea was that rather than talking to a lender about what's your loan rate today, you could say, well, what's your APR? And if you called two different lenders, just shopping the APR would be sufficient. The challenge is, and let me take a second just to try and re-explain this, just to make sure that we're clear. Let's say that if you were going to borrow $300,000 and your monthly payment was going to be $1,800, and that was assuming an interest rate of 6%, but that's just for the purpose of figuring this out. If your mortgage payment is going to be $1,800, principal and interest, your interest rate is 6%, you're borrowing $300,000. But what were the loan closing costs, and how did that actually affect things? The government turns around and says, well, let's say that your loan closing costs, the fees that were actually charged by the lender, were $4,000. The APR then turns around and says, well, then if you didn't have to pay those $4,000, you wouldn't borrow $300,000. You'd only borrow $296,000. So if you really only wanted to borrow $296,000, but yet your monthly payment is still $1,800, now your note rate may be 6%, but your annual percentage rate might be 6.095. In theory, it sounds like it makes a lot of sense and it should be easy to follow. The challenge is that the actual day of the month that you're going to close on your loan affects your APR. So if you talk to two different lenders and you just simply say, well, what's my APR? One lender may have calculated this based on your closing being on the last day of the month. Another lender may have calculated the loan closing on the 15th day of the month. And that prepaid interest cost actually has an impact on the actual annual percentage rate.
So how does the day of the month affect it, though? I don't understand.
Well, mortgage billing cycles run from the first of the month to the first of the month. And whatever month that you close in, you're going to go at least 30 days before your first mortgage payment is due. So if you close on the 15th of the month of, let's just say, October, your first mortgage payment won't be in November. Your first mortgage payment will be on December 1st. But you've actually had use of the money from October 15th. Your billing cycle didn't start till November 1st. So they have you bring to the closing what they call a prepaid or an interim interest, where they simply take the amount that you're borrowing, let's use the example of $300,000, they multiply that times 6%, because that was the interest rate for this example. They say, okay, that's X amount of dollars divided by 365, and that's your daily interest charge, also known as a per diem, or as an interim interest rate. And then for every day of the month that you're outside of the billing cycle, you would need to bring that extra money to closing. So for example, if your per diem interest cost was $40 a day, if you're closing on the last day of the month, you only need to bring one day of interim interest, $40. Whereas if you closed on the 21st of the month, you'd have 10 days use of the money, that would be $400. And if you close on the 10th of the month, maybe you've got 20 days use of the money outside of the billing cycle, that then in turn would make that you need to bring an extra $800 to the closing to bring yourself back into the billing cycle. And so since you're bringing more prepaid interest to the closing, that affects your annual percentage rate. So it's very important when comparing loans to compare the costs. And when you're comparing annual percentage rate, you actually need to ask the question of exactly how many days of interim interest were used in doing the comparison. Yes?
What types of fees are generally included in the APR?
Well, the annual percentage rate is supposed to reflect all the fees that you would be incurring just because of the fact that you're financing. So for instance, if the lender has an application fee, if the lender has a credit report fee, if the lender has discount points or origination fees, any of the fees that are specifically associated, including the appraisal. You can buy a home without having an appraisal done if you're paying cash. So any fee that's directly associated with the fact that you're borrowing money, that's all taken into consideration in the annual percentage rate.
So for instance, what types of fees aren't included then?
Well, things like title insurance wouldn't necessarily be included in the net APR, because if you're buying a property, you probably have title insurance. Recording fees at the courthouse wouldn't necessarily be included, because you're going to be paying some of these fees whether you pay cash for the home or whether you're taking out a mortgage. There's some others off the top of my head that are escaping me.
Okay. That sounds like good advice. Probably need to talk more about that with you. How can I get a hold of you?
Well, I'm pretty easy to reach. You can call me on my cell phone at any time. My cell phone number is area code 973-598-5006. Again, my name is Martin Straka, and my cell phone number is 973-598-5006. I hope this information was helpful to you.